Alrighty, good morning everyone. It's Friday, July 9th, 2021, and we're going to get started with our pre-market analysis on the S&P 500 futures market here. Looks like in the overnight session we've had a really nice strong push. Remember yesterday we talked about this bullish indications that we had off the overnight low. It looks like this is continuing to follow through. And so we'll see how strong this push can really be this morning. Looking at our quarterly charts and our monthly charts, still same situation as we've talked about for weeks and months now. Looking very strong, no indications of exhaustion. When we get to our weekly here, we've broken out of this bearish kind of level at 76.75 that you see on the chart here. We actually held that level on this new candle. Let's see, the low is 79.25. So just in front of 76.75 here, have not broken through that line in the sand for the bulls and the bears there. And so things still looking pretty strong. Remember yesterday, this candle, we started having kind of what looked to be a potential for a bearish engulfing candle to form. Assuming that everything is strong this morning and we close out somewhere up near the highs from yesterday, or maybe even push a little bit further, we'll no longer really have to worry about that bearish engulfing situation, and it'll be another nice strong bullish bar here on the weekly. And again, no indications of exhaustion from that divergent perspective. On our daily here, pretty much that same situation from yesterday's yesterday's candle. We came down to that 79.25, got a nice bullish indication off of that low that we talked about it yesterday. That was from the overnight, from the night before. So that's holding right now. And then on the current daily candle, which we really don't want to say too much about. In fact, I should probably remove that arrow for now. We do have a bullish indication off of that low, and we're actually going to see that on a number of time frames here. So off of the current overnight low or this daily low, we do have a bullish indication, but this bar has the rest of today to form. So we're going to have to kind of monitor that as the day goes on. Here on the 4 hour, you can see the same situation off of that overnight low here. So this overnight low at 93.25, a really nice bullish indication here on the 4 hour. Did not quite get a bullish indication from the previous daily low that we see here on the daily, but we do see it here on the pullback after the bounce from that previous daily low, again at that 93.25 level. And now looking at the current situation, we do actually have somewhat of a bearish indication off of the high here, but we are going to again have to monitor this because this candle has another 45 minutes to form. We can make that argument off of the previous candle that there sure was a bearish divergence, at least at the moment, or at least the time that closed. But as this continues to push here, if RVI does break above 56, then we'll no longer have that situation, and this will end up being a false signal. We have already broken above the high, so in a way we have negated that signal, but we haven't broken by very much. And so we're going to have to watch this current bar as when it closes at 7 a.m. to see if we still have a potential bearish indication there. But right now, again, we do have the bullish indication off of that 93.25, and we're going to see that similar indications from the previous daily low and from after the bounce and the pullback from that bounce over here. So let's go down to our 60-minute, and the 60-minute you can see really nice bullish divergence off the previous daily low and off of this pullback over here at 93.25. So two nice bullish indications over here, and remember that these indications for a bullish bounce from 93.25, they become invalid once we break through 79.25. So pretty much everything is pointing to the previous daily low here. So if that holds, again, if this daily bullish divergence holds, it's based off of 79.25. So if we can hold 79.25 on the bullish indications from 93.25 and the bullish indications from that level itself, that will be a really good case for the bulls this morning. Of course, that would be a pretty nice drop from 43.30 all the way back to 42.80, a 50-point pullback. But just pointing out that that is really going to be an important level, and 93.25 ideally should hold here. Let's go down to the intermediate time frames, and basically we see a lot of agreement there. So you can see back on at 79.25, the previous daily low here, a nice bullish indication. And now that I need to jump to the 30-minute, sorry. 30-minute had the same bullish indication down here off the previous daily low. And on the 30-minute, we don't necessarily get that agreement from 93.25. So here's where we start to get some trouble. Pretty much every high time frame that we looked at, not including the ultra high time frames, had a bullish indication around that 93.25 level. But when we jump to our intermediate time frames, the two time frames in between our high and our low time frames, the 10 and the 30 don't have a nice bullish indication from 93.25. So there's a little bit of a discrepancy there, but all of them agree from 79.25. So the 10-minute here and the 30-minute both have a really nice agreement for that bullish case up there. Now remember, on the 4-hour, we were talking about a potential bearish indication from the highs up here. Well, that's where we got a lot of bearish indications this morning. In fact, when I got to the charts, like I told everyone before we started the pre-market here, that I got to the charts around 5 a.m. Pacific, and there were bearish indications on the 30-minute, on the 10-minute. Let me jump down, we'll bring up the 3-minute here. On the 3-minute, right up top here, and then on our short time frames, the 1-minute, and then the 5:12. You can't see, I got to zoom in a little bit, and on the 5:12. So a lot of bearish indications from this 36. So that's going to be the line in the sand on the upper end here. If we can get through 36, then almost all of the bearish indications, the 3-minute, the 10-minute, the 1-minute, the 30-minute, and all those indications will be broken, and really we'll just have that 4-hour signal to look at to see if that ends up being negated as well. So 36 is going to be important this morning. Interestingly enough, we do have 36.75 as one of our important levels. So we can use that as a gauge for a potential bullish indication coming into the open here, if they can get through that general area there. And then again, remember on the downside here, if they do get through 93.25, where we did have a few indications of bullishness on the higher time frames there, and then maybe even arguably on some of the shorter time frames, then it will start to look pretty bearish, but holding the previous daily low at 79.25 will still hold all of the bullish indications that we got on pretty much every single time frame. So hopefully that gives a little bit of structure for this morning. If we look at the current push from 93.25, where we got some of those bullish indications, if we look at this leg here, we have the 38% retracement bringing us right back to 1950 to the tick here. And then 50% of this whole move is essentially right back to that previous swing high back here. And it's also that 1575 is 50% of that previous daily price action. So these are two levels that are going to be important here, as if we do pull back deeper, and maybe even 25 itself. These three levels we're going to want to look and see. We could potentially get a nice short time frame divergence setup or something else for a nice bounce to continue with the current push, because we do have more so a lot of bullish indications in the previous daily high. And then, like I said, we have to get through 36 because there are a lot of bearish indications up top here. And so I think that basically lays the framework for today.